Hello, Paul Gerrard, Price Accounting Services. Welcome back to this session within our property investor series. This video concerns the issue of when do tax deductions commence. Okay, it's a fairly common question. The general answer to it is that costs are deductible from the time the property is available to rent. Now, that doesn't necessarily mean that, for example, you buy a property on the Thursday and you can't get a tenant for a couple of weeks because you want to do a little bit of initial repair work, etc. That's not a concern, okay. But we are concerned where there's no immediate intention to make a property available to rent because, for example, you want to do very extensive renovations to the property, in which case we do have one area of specific deduction which we can address, and that is there's a decision the courts made a number of years back called Steele's decision. Steele's decision effectively said that where your intention is to buy an income producing property and the intention is to make it rental producing, then you can claim the interest deduction, just the interest deduction, for the period prior to its availability for rental. Now that is quite broad and can extend to, for example, the situation of somebody who buys land, builds a new house on it and then rents it out. So you can end up with an interest deduction for a 12-month period before you get rental income. That's really important to remember that, because I do encounter people who say, well, I've actually had this property and it's only just now renting because I couldn't claim the deductions previously. And I say, well, yes, you could have. Under Steele's principles, you could have claimed very limited deductions last year. So important to get that right. But generally speaking, the start date available for rent rule is the general rule. Just watch it for renovations, and also watch it where your primary purpose for the property isn't income production. So for example, you buy a lot and you demo the old property on it, and the intention is to build a duplex and you're going to live in one and rent out the other. In which case I believe you would be entitled under Steele's principles to claim 50%, provided the 50% relates to the acquisition of the land and or the 50% of the construction costs. So just watch for apportionment issues there too. So hope that addresses the start date for deductions, and look forward to seeing you subscribe, watch one of our other videos in this playlist, and look forward to seeing you another time. Cheers.